All right. Welcome everyone who is joining us and who is joining us on Facebook as well too. My name is Justin Isaac with the Lawyer in Blue Jeans Group. I'm joined today by Joe Stenovec, certified financial planner. Joe, thank you for joining us.
You're welcome.
So we're going to get right into it. You've been on a couple of times. We've talked about a few different ththings with regards to the economy. I want to know because there's a lot of uncertainty out there. There's a lot of kind of angry people, including some Congress people who are upset about the Congress's lack of action on another stimulus package or a Corona package. Have you heard anything? Do we know anything about when the next package will be coming up?
So a couple things. Number one is you'll notice I'm a little congested. No, I do not have coronavirus. I did get tested. I just have a cold. My son brought home from daycare a couple weeks ago, almost 2 weeks ago. So I've just been fighting it off. But so excuse the congestion, how I sound. But the latest with the stimulus is there's still a lot of gridlock, especially now, given we're in the lame duck up until Biden gets in office in January. The big thing really though is I hope there's some sort of resolution with this is on December 26th, the day after Christmas, the extended unemployment benefits stop. And there are millions of Americans that really do need that benefit. So I kind of hope that there's some sort of mini stimulus package to at least extend the unemployment benefits.
Mm-hmm.
And also, I think part of the gridlock with all this, not only is it, the lame duck, but you also have billions of dollars that are still left over from some of these credit facilities. And when I say credit facility, what I'm talking about is back in April, when they originally Congress passed the CARES Act, which was it was bipartisan. Everybody was on board with it. Peak COVID. There was inside of the CARES Act, there was a Main Street lending facility program, which was basically the Treasury authorizing billions of dollars in funds to be issued to basically backstop companies that were failing. And I want to say it was around $450 billion, and a fraction of that money has been used. And it's just kind of surprising. And so I think on one side of the aisle, they're kind of saying, do we really need a massive stimulus package, the $2 trillion plus stimulus package? And on the other side of the aisle, they're saying yes. And then you also have the stalemate around, well, what is the money going to be used for? Because the Democrats want money to go to states. Republicans are saying it's bailing out fiscally poorly run states, et cetera. So it's kind of more the same with the gridlock. But I think what's really important is these mini packages that are more direct to support like restaurants maybe, and then also the unemployment extension benefits as well.
Yeah, I think that we're heading to a very interesting time because the eviction moratorium is ending soon. January, isn't it?
In January.
And we could have the eviction moratorium end, and then we could also have no backup to the unemployment benefits, and people can be in some serious hurt here, and we don't have any real sign that the corona is going away right now, even though we have three potential vaccines and one what is it, an antibody therapy that's pretty effective too. So we might not see those until March, they say, or April. I think it's a very big shocker that Congress isn't getting along and not getting stuff done. They're, known for this kind of thing, but Congress just recently got dismissed. And I know that, AOC, think of her what you will, was all over the news saying, why are we getting dismissed right now for, break when we don't have a package passed? And I totally agree with her. I don't always agree with her, but that's one thing I totally agree with her on, that we need to get something in place because we're coming into the holiday season and we have this huge thing looming. And not to mention the uncertainty with the handover from Trump to Biden. Will there be a smooth handover? How is it going to kind of play out? I guess that remains to be seen. But the market didn't react as negatively as I thought they would, or it would, from Biden winning. So what did we see, and why did it react that way?
So a couple of things. Trump just announced yesterday that they're starting the process of the transition to Biden. And I think that's partly why the market rally today.
I mean, he kind of did. He didn't say he concedes. He's just facilitating
starting
the
the process.
Yeah,
right?
but he's not giving up, even though they've lost every single lawsuit that they brought forward.
Right. Yeah, exactly. Yeah, so the market today crossed the Dow Jones Industrial Average, the 30 stock index, crossed over 30,000. First time that we've seen 30,000 on the Dow in history. Now, there's, you could speculate why, and truly it's hard to pinpoint one particular reason, but let me just give you, kind of my perspective on this, and why the market rallied after the election or the week of the election. So number one is, leading up to the election, there was a lot of fear over this contested election, and we wouldn't know the outcome until, December. I think December 6th was the cutoff, if I'm not mistaken, or somewhere right around there. And but what happened was, it became fairly apparent even the night of the election, or maybe the next day, that there was a high probability that Biden was going to win. But the Senate, there were a couple surprises with Congress. With the House, the Republicans picked up, I think, 11 seats or so. And then the Senate, which is still not, the races have not concluded, because there's two runoff races in Georgia on January 5th. And that's actually a big deal. And I think that's why the market reacted the way that it did, because the market realized that there's a very low probability that we're going to see this blue wave that everybody was talking about, which basically meant Biden's administration was going to have their way with higher taxes, higher regulation, et cetera. I mean, he's going to be able to pass certain legislation through, whether, like Trump did a lot of executive order, Biden will be able to do the same thing. But with certain legislation, such as higher taxes, if you have a Senate that is controlled by Republicans, a House that is controlled by Democrats, and Biden in the office, the likelihood of seeing higher taxes it's decreased. Or even if we do see higher taxes, which I still wouldn't be surprised, it's not going to be to the extent that maybe the market was kind of expecting. And last thing is, really, when you have a split, when you have this particular setup for whatever reason, a Democrat in office as president, a Republican House, and a Democratic Senate, or I'm sorry, vice versa. Say that again. Let me say that again. Republican Senate, Democratic House,
Mm-hmm.
and Democrat as president. That's the most favorable backdrop for the stock market. And it also kind of ensures that not much is going to get done. So we'll see more of the gridlock, which the market kind of reacts positively to that, knowing that there's not going to be one extreme or the other. It's going to be like a lot of tick for tack and trying to get things done.
Well, I guess, when you have either all blue or all red, the market doesn't really, I mean, if it's par for the course where they're kind of gridlocking each other, which they're, been doing for years now, I guess the market wouldn't react as much because they know what to expect. But
know what to expect from Washington.
Yeah,
right.
Yeah, exactly. Okay, well, I mean, that kind of makes sense. What does this mean? The Dow hitting 30,000, what does that mean to the average person? Does that mean that the economy is in a great place? Because I don't think it is, really.
It depends on who you're talking to. I mean,
Yeah.
The economy, it's a microcosm of your particular personal financial circumstances, right? Like, how are you feeling as a household?
Yeah.
You can talk to 10 people and they're going to get 10 different answers right now,
That's a good point. Yeah.
And so I think it really just frankly depends on the individual circumstances. And, kind of one thing that I've been kind of talking to clients about is right now, the Dow where it is, the S&P 500, the NASDAQ, everything is up. Like, the market's doing well, and it's nice, right? It feels good for those that have money at risk in the stock market. It still feels uncomfortable. I mean, it always feels uncomfortable to be an investor.
Yeah.
But especially right now, the uncertainty, what I'm kind of gathering from talking with clients is the level of uncertainty feels elevated. And it's obviously, we're all kind of, the lockdowns and everything we're hearing about COVID in conjunction with this election, everybody's just a little bit more on edge and uncomfortable. Now, the market, though, is really not the economy, and the economy is not the stock market. And you get these divergences. I mean, just look at back in March. I mean, the market dropped around 35%, and by the end of April, we recovered maybe half of that. And even in April, when I came on here, at that time we were talking about how is the stock market going up,
Yeah.
and remember how we were talking about, well, the market's looking past this, so the market is looking ahead, and
Yeah.
it has certain expectations for what it thinks might happen in the next 12 months. And right now you have the market expecting a vaccine. You have the market expecting people to go back to their normal day-to-day life, maybe within 6 to 12 months, or for some people even sooner. So the market's just looking past all that.
So do you think that the vaccine is priced into the current pricing? Or do you think we're going to see a big bump as soon as the actual vaccine starts rolling out?
There's this thing in investing called buy the rumor, sell the news.
Mm-hmm.
And basically what that means is it gets priced in ahead of time. I mean, who knows, right? But buy the rumor, sell the news. This is a perfect example of that, where it's vaccine news is coming out, right? That's the rumor. Technically, I know it's news because it's vaccine news, but that's the rumor that we're going to have a vaccine in circulation by January, right? And so when that happens, the market is kind of anticipating that. And so leading up to the event, in this case, vaccine circulation, the market is pricing it in. And then when it happens, it's like ho-hum, it's already there.
So then you sell.
Yeah, I mean, I wouldn't necessarily sell, but it's just don't expect to see some sort of major catalyst higher.
Yeah.
Because of the vaccine news, in January, whatever it is.
So I think that the market in general, it looks like it also feels like they're waiting for the other good news, the more good news, there's not going to be a day where just Corona's gone and it's out of the news. It's not going to happen. But I think a lot of people are thinking something along those lines, because anytime you hear about a vaccine in the news, that stock goes nuts and the whole market goes nuts. So is it everyone's just waiting on the sidelines for this big pop? Or do you think it's just going to be kind of a gradual thing where we just, maybe this is the new norm, this is the new pricing?
Yeah, this is the new normal. I mean, if you look at the fundamentals, so taking a step back away from like the day-to-day action of the stock market, and you look within the individual companies, I think it was Kohl's. Kohl's, I mean, was kind of, they were not in good financial shape a year ago, 2 years ago. And they just announced that they're going to put their dividend back into place at the beginning of next year. So what we're also seeing right now is the market was kind of, I mean, this sounds terrible, but the market was kind of overreacting to the COVID impact on the economy. Yes, we saw the economy, GDP crash, the 9% annualized. It wasn't 33% over the year. It was the 9% over that one quarter a couple of months ago. The market kind of expected all that. And a lot of these companies, what was priced into the market was catastrophic drops in profits. And we didn't see any of that happen. And so now we're seeing this kind of a relief rally, like, oh, we're not going to see the bankruptcies that we thought we were, at least with some of these bigger companies. Kohl's is putting their dividend back into place. Nordstrom's doing better than they expected. So when you have those types of companies that are doing better, that to me says not every consumer, but a lot of consumers are doing better than what was expected at this point.
Yeah, I think traditionally the holiday season is where most of the profits are made for the retail sector. Now we've gone away from the standard brick and mortar and more online shopping in general. So maybe it's not going to be that big of a difference. However, this year, all your price predictions and models they're garbage. Like nothing matters this year. And it's a very weird kind of feeling. So you have to think about, how can you plan in a traditional sense? You would say, okay, this is November 24th, right? And this would be like the last part of the segment that we were going to talk about, which was how to plan for next year. But you can't really do your traditional planning now, can you?
Well, there are certain areas that you can do your traditional planning. I mean, first off, like when talking about financial planning, like getting off the markets and just talking about financial planning, like it's getting back to why. Like, why are you investing your money in the market to begin with?
Yeah.
Coming up with an answer for that, and why why is this money or money in general, why is it important to you as Justin Isaac, right?
Yeah.
So getting to the root of that first, and then looking at your financial resources and coming up with a strategy based on your financial resources, what you have, and your why. And then what's going to happen in the next 6 to 12 months. I mean, it's always important, but in the grand scheme of things, like looking at your financial life, you know, if you're 5 years away from retirement, what's going to happen in the next 6 to 12 months may not have as big of an impact on your financial plan as you might think. Now, granted, yes, the uncertainty, it's uncomfortable. Investing right now, like I was saying, it's uncomfortable. So there's definitely things that need to be talked through and discussed. But ultimately, though, the next 6 to 12 months is not, no certainty, but should not have a significant bearing on your long-term financial plan.
Well, I think in my mind, you have this kind of goal, and this is, I guess, is why a financial planner is so helpful, because I call and ask you questions all the time. I follow these things, but I don't follow them like you do. And I think it's important to have someone that, I'm not trying to make this a big commercial for you, but I think it's important to have someone who you can ask these questions to about putting a plan in place, because even if it's not retirement planning, right, you shouldn't let this kind of, there's opportunities in this market, and B, you shouldn't let it disrupt your overall plan. But again, you need someone who is in tune with what's going on. Don't sit on the sidelines, because, again, there's opportunities out there as well. But I think that for the person who is not good with change, for someone who is kind of a straight line investor, who has like their very strict conservative fundamentals, this is not a good market for them. This is not a good time for them, because it is hard you have to be able to adjust like that, right?
Yeah, it is. It's the uncertainty, right? So if somebody's, coming in and saying, hey, I've been out of the stock market for 5 years, I've been waiting for this some sort of event, and a crash or whatever you want to call it, to turn around and change, and say, well, it's time to put that money into the stock market, or whatever the outcome of a plan is. That's significant change, and that change is hard. Yeah. And that gets back to looking at, when it comes to planning, in that example is looking at those timeframes, saying, well, Justin, if your goal is to plan for, some sort of event, financial event that's in 10 years, and you don't expect to need this capital for 10 years, with what you're doing now, is that the best solution for that capital? Yeah. Knowing that inflation is going to be, whatever it is, call it 1.5%, 2%. Is it okay for you to earn 0 to 0.5% on that capital, knowing that the goal is in 10 years? Or is there a different solution? And when you kind of take a step back, regardless of your circumstances today, change is possible, but you need to be educated and understand what you're changing into, and what the implications are, and what the potential outcomes are.
Yeah, I think just looking at the volatility, just looking at the swings and the news, and it could be pretty overwhelming.
It's unnerving for sure.
And I think part of the unnerving part too is that, you have an event like 9/11, or the 2008 crash was a little bit longer or more prolonged, and we saw big drops from these things, but we saw steady inclines. I think the biggest reason you mentioned earlier about people being hesitant, and there's an overall kind of skepticism in the market, I think it's because like we're doing this, we're going back in the purple tier, we're going back on lockdowns, and there's no real signs of Corona going away. Not in the sense that it's just a quick event. And so now I think maybe people are starting to get used to that, but also that's why we're ready to jump on a Moderna vaccine or this or that, Right. So anyone, if they said like Kodak was going to start making vaccines and start working on that stuff, and then they're like, actually, no, they're going to get that revoked from the government, and their stock just went, tanked.
That's all speculation, right?
Yeah, exactly. And that is one thing about the market that you need to be very careful about, and talk to professionals, because you can get taken for a lot of money if you just hear something on, Jim Cramer on MSNBC or something like that. Yeah. And then all of a sudden the floor falls out from underneath you.
Yeah, that's the emotional side of it, for sure.
Okay, so what are I guess the number one thing that you would say end of year is, if you're taking a look at your portfolio, your plan, is just to kind of review your plan and say, is this doing what I want it to do?
Yeah.
Would you say that's your first thing that you should do end of year?
End of year. Okay. Yeah, that's one thing. Let me give you a couple tips
Okay.
for these last 5 or so weeks of the year.
Uh-huh.
Number one is, if you have money invested in the financial markets in a regular taxable account. So like if somebody, like a brokerage account, should be registered in your trust, especially if you're in California. Then looking at your individual holdings, and if you have any positions that are down, you can look at possibly selling them to realize a loss, because that will help you with taxes. You can do what's called tax loss harvesting. Look at those losses and offsetting against other gains as one idea. Another idea is looking at your current tax situation, and if you have money inside of an IRA or a qualified account, an individual retirement account, is if you have a down year income-wise, or maybe you lost your job as an example, something like that, is if your income is down, looking at maybe moving some of that IRA into a Roth IRA. Because one thing you have to expect is tax rates. There's a good chance that tax rates will be higher in the future. So maybe paying some tax on that money now. And reviewing beneficiaries is another one, because the IRS recently changed the rules around inherited IRAs.
Okay.
You used to be able to stretch that out. If you pass away and your IRA goes to your child, the old rules are the child could stretch that IRA over their life expectancy, basically taking really small withdrawals, incrementally over time. And now you just have to basically liquidate the account within 10 years. And so is your IRA inheritance strategy still the most optimal? Or are there other assets that maybe you could earmark for a child and then maybe change beneficiaries on a retirement account? Those are another one. Sticking with the tax theme is mutual funds. So if you have a mutual fund inside of a taxable account, mutual funds typically pay out their capital gains usually this second or so week of December. And so if there's an old fund that you own and you're like, I don't really know if I want to continue to own this thing, if you had plans on selling it, you might want to think about doing that before they pay out the capital gain. There's just little things like that.
Yeah.
And then last is just also, because of the CARES Act, for those, if you were impacted by the COVID and you lost your job, there's a lot of rules out there on being able to access money in retirement accounts if you are you're experiencing financial hardship. And so making sure that you know what those rules are, because if you anticipate who knows if they're going to extend those into 2021. So assuming that they do expire at the end of the year, knowing what the rules are and whether you expect to need some money next year, based on your circumstances, and you need to think about doing something this year in tax year 2020.
So, and of course, everyone's situation is different, and that's what we've talked about every time we have this chat. Is that there's not one size fits all when it comes to financial planning. Everyone has a different plan. Everyone has a different goal, and that will adjust your plan accordingly. Especially, depending on how size of your family and the size of that you've already saved and whatnot too. So, I think it's important to speak to someone like you, Joe, a professional who can really take a look holistically from 10,000 feet to say, okay, what are we doing here? What do we, how do we need to kind of put our ducks in a row to make sure we're maximizing something like this, and taking advantage of some of the things that Congress is allowing us to do, because that not having to pay the penalties that's a pretty significant saving. Now, granted, you still have to pay the income tax, right? So
yeah, well, yeah, you have to pay. Depends on what we're talking about, but for retirement accounts, is they're allowing the IRS and Congress, basically the way they set it up is, if you take a withdrawal from a retirement account and it is the withdrawal was due to COVID hardship, then you avoid, depending upon your age, you can avoid the 10% penalty, basically early withdrawal penalty. And then they'll allow you to pay the tax over a couple of tax years, over 3 tax years.
Okay.
So you can pay the tax. You don't have to pay it all in 1 year.
Mm-hmm.
So there are some favorable kind of tax relief kind of embedded within the CARES Act that you might want to review.
Well, ultimately, like I said, I run things by you all the time just to make sure, and make sure you have a good CPA too. That is priceless, because we get financial questions all the time, or CPA questions all the time, and I have to say, hey, look, you need to talk to a professional. Don't put your kids on your property, because all the different tax purposes, legally, or liability purposes. There's a lot of different reasons you don't want to do certain things. So before you go making some big decision because your neighbor Frank heard that it's okay to do, make sure you check with someone. So Joe, why don't you? We're gonna put your email out, but can people give you a call for a free consultation?
Yeah, they can. I would say the best way to reach me is going to be by phone. You can call my office. So, excuse me. Sorry. See, I can't kick the cough.
Oh, you went the whole time without doing a cough.
I know. I know. Call the office 619-574-7526. Or you could, I'm here on Facebook, so you can send me a message and we can connect.
Okay.
That way as well.
And if you are watching on Facebook, make sure you like or share so people can see this. We had some good topics that we talked about today. So hopefully people will think about what to do end of year. And, if you have something that you were planning on doing and you want to run it by Joe, make sure to reach out to him. We're going to put his email in the, sorry, there's a bag moving on my counter. That was kind of creepy. And we'll put his information into the Facebook chat as well as the other chat here too. Any last words, any last tips? We might not do another webinar before the year is up with you, Joe.
No, I think that was good. I mean, if any questions, feel free to reach out, and I hope everybody enjoys the holidays. Very unique year.
Thanksgiving.
But 2021 is right around the corner. So
make sure you don't sing above a whisper.
Yeah, no singing.
Yeah, that's those rules are crazy. All right. Thank you, everyone. Please email me, justin@lawyerinbluejeans.com, if you have any questions. Again, like or share this on Facebook so the algorithm gets tricked and it shows to more people and all the stuff like that we have no idea how it works.
Yeah.
And if you want the link to this webinar to send to somebody else too, make sure just shoot me an email, justin@lawyerinbluejeans.com. Joe, happy Thanksgiving and happy holiday. And we'll see you soon.
All right. Thanks, everybody.